Good morning traders, today is the 29th of April 2021. My name is Neville Hornsey, market analyst with YouTrading. Today I'm going to be talking about the US dollar versus the Canadian dollar. Right, looking at my charts, first of all we're going to start with the active trader sentiment indicator for the dollar versus the Canadian dollar, and we can see that 93% of retail traders are bullish this pair, with a measly 7% trying to short it. Now, we're on a monthly chart, and you can see that all the way back to the early 80s, we've been trading in this range between 1.45 and 1.11, all the way up to the 160s, and then all the way down to 0.95. And yeah, we're kind of in the middle of all of that. So prices have consolidated for the past 5 years within this range, and we're kind of at the lower bounds of that now. Now we are accelerating to the downside, and if we were to consider the May 2015 and the September 2017 lows as a double bottom, then we could be about to see a retest of those lows and maybe a sweep lower, which would then open up this swing high here around the 1.12 as a potential target to the downside should we break lower than this sort of range for once. All right, going down to the weekly, we do have some significant support coming in. So we've got these swing lows here from the beginning of 2018 and then the September 2017, as I said. So this particular swing low here, obviously we're going to try and test that. If we sweep the lows and then go back higher, I'll be looking for a retest and then a continuation to the downside when we approach the 1.25. This, if I go down to the daily, you can see that on the 21st of April, this big red candle here, it's when the Bank of Canada announced they were going to keep rates on hold. And in their statement, if we go to their statement, it said global economic growth is stronger than was forecast in the January monetary policy report. In Canada, growth in the first quarter appears considerably stronger than the bank's January forecast. And the bank has revised up its estimate of potential output. And all of that is while Canada is experiencing a difficult third wave of infections and lockdowns, because somehow this pandemic, it may be causing disruptions, but Canadian economic activity still continues, and a lot of that is on the back of increasing oil prices. You can see here crude oil prices directly appreciate or depreciate the Canadian dollar. And we can see that as oil prices go up, then the dollar is coming down and the Canadian dollar is inversely going up. So like I said, we're at the lower end of this big consolidation area. We probably will now start to accelerate to the downside, another 100 pips at least. And if we do, I'll be interested to see how we react to this swing low here, and if we then accelerate down towards this support. Obviously, the dollar itself would need to continue coming lower, so I'd want to see a breakdown of this support, like rising support trend line. So you break down, retest, and then continue lower. The Fed last night kept their interest rates on hold, so monetary policy, fiscal policy, and everything that's going on in America suggests that this dollar should continue in its massive downtrend. And if we look to the British pound versus the CAD, the British pound itself is doing really well against all of the other currencies, yet the Canadian dollar is still pushing the GBP CAD lower. In other news, the euro dollar, this is potentially going to keep the dollar buoyant for a little bit, because the dollar index is a basket of currencies, and the euro is heavily weighted within that currency index. And you can see that the euro is currently dropping, so that might be supportive of the dollar overall. But as you can see, the dollar CAD is, it might do the, if we just zoom into it, you can see that if it's bearish on a day, it's really bearish, and if it's consolidating, it's a small green candle. So I'm expecting either a big move down or a little sideways consolidation. So, you know, if you're looking for some sort of strategy, you know, wait for a big move, a pause, and then take an aggressive breakdown trade lower. Or you can just wait for, like I said, the bounce up to, you know, particular support area, which is now active resistance, before attempting to go lower. But I am looking for these traders here, these 93% of traders, to get squeezed further, and a lot of that is to do with the rising oil and the decreasing dollar. Okay, I hope that was interesting and a little bit useful. I hope that was useful for you, and I look forward to speaking to you tomorrow.